Okay, let's get to a corporate conversation now. Anupam Rasayan is in focus on the back of its Q4 numbers. The company's posted a strong recovery on a sequential basis. Though, if you look at the numbers on a year-on-year basis, there is some weakness. Gross margins have declined, on a quarter-on-quarter basis. So that's a bit disappointing. The stock on the whole is on the flatter side, down close to about 0.5%. Vishal Thakkar, Deputy CFO at Anupam Rasayan, is with us on the show now. Thank you very much for joining in. First, if you could just give us the big picture guidance on the demand environment, the outlook as you enter FY25, and what could revenue growth and margins look like this year?
Hi, good morning, and thank you for getting us on your channel. Let's talk about the overall market. See, the overall market, if you look at this year, FY25, we think it's a growth year for us. However, if you look at it, the first half looks little challenging as we enter this year, because last year, if you look at last 6 months, has been quite where we have faced headwinds for all the industry. And we believe that for the agrochemical industry for next 6 months, maybe there will be a little bit of a headwind there. But if you look at it from a pharma and polymer side, which is where we have been seeing a reasonably good growth in this year, we believe that this growth will continue for the next next year onwards. Also, in that if you look at it, FY25 should look a growth year. And once the pharma agrochem comes back, probably the growth will be far stronger and robust as we go. Maybe entering the 2026, the growth should look far more robust from there on.
So FY25, yeah, go ahead.
On the margin side, we believe that the margins will be similar to what we have been seeing in the historical, where we've been guiding 26-28% is where we should be looking at, which have been the past. And especially with the business model that we have, that kind of numbers look reasonable for us, because a lot of our costs or most of our costs are passed through, and hence we are able to maintain that margin.
Okay. Mr. Thakkar, I mean, just to take that point on agrochemicals a little further, you just said that next 6 months look a little challenging on agrochemicals. Just, go into a little more detail over there, because I believe that's the biggest segment for you. It's about 65% of your revenue. What are the challenges you're facing? You were just speaking to one of the stock market analysts, and in fact, the market seems to think that will perhaps show one of the best recoveries. So what's really happening in the market?
So again, I said the year, if you are talking about, is a different story. I agree with the analysts that are saying that yes, there will be recovery. But if you look at the first two quarters, if you really look at it, is going to be a little bit on the side where the demand will be tepid, and also if you look at the pricing, will be more on the flattish side. And hence, we think that the first 2 quarters will be cautious in terms of demand and demand growth. But 2 quarters later, the third and the fourth quarter, which is typically entering the CY25 for the international customers, will be the time when we will see a stronger growth coming in from there on. So that's where we are trying to say that first 2 quarters we'll be cautious about our growth and demand.
Got it. So basically, you're saying that the recovery in agrochemicals probably is going to be back-ended. So just to break up the sequential recovery you saw in the fourth quarter, where your revenue was up almost 35-36%. Did that come in from the pharma segment, or which segment sort of resulted in it? And how much was volume? How much was pricing? Just basically give us the volume and pricing trends for all of your segments. We've discussed agro, but the other segments as well.
So I'll put it in a simple manner. If you really ask me on the split side, split was similar, but we had launched 17 new molecules in this year, and more than 6 in the last quarter. So that typically when you launch, it takes you a few quarters or some time to really pick it up, and that also has contributed to my revenue. 2, if you look at it, largely the recovery is coming from the volume rather than only from the pricing. Because pricing, I think, is if you look at the pricing environment has been pretty flattish, deflationary to flattish, so we don't see pricing to be coming up big time. But volume recovery is where it is, and especially from the new product contribution has really brought this growth, if I were to say. And 2 is also you to see most of us agrochemical industry is more a cyclical one also. So part of the recovery you will see is more coming from the year to year, because if you look at a YOY is where at times also you got to be conscious of that along with the sequential growth. So that's where I will put it.
Okay, got that. Can you talk about your working capital days? Because they worsened in FY25 to over 300, and in the past you've guided for about 220. What went wrong? Question 1. And 2, in FY25, what would the working days look like?
Okay, let me give you first in terms of, yes, if you look at the environment itself, what has happened is there has been a sluggish demand, and that sluggish demand led to two or three things here. One, I had to offer a more extended credits to my existing customers, which led to my debtors expanding. Two, because of the lower sales or level sales velocity, my inventory unwinding has been slower or not where I wanted. And three is absolutely because my revenue has dropped by let's say 10-12%. It also impacts the numerator-denominator phenomenon and number of days. To that extent, even if I'm flat on my working capital, it gets deflationary. Whereas what we had when we went into the year, we had expected around a double-digit growth. So had that double-digit growth come in, we would have been better off. But that's where we are, and we think that FY25 we should be able to improve these numbers.
So you get to about 250, or do you get back to 220 now that you are gunning for growth in FY25?
Give me a quarter or two to give you the annual numbers.
All right.
But yes, it should be in that direction. Direction is true. The extent let's examine, because how the market also pans out is something that I would want to see before I guide this time.
Chal, a quick word on the newer segments: defense, battery, chemicals. What's the capex that you've set aside? When does it start contributing?
So if you see, we had done a capex. We had announced a capex of 670 crores. That capex is good enough for doing all that what we have talked about: newer chemistry, newer applications, battery, be it defense, be it polymers. All that will come into that portfolio itself from those products, from that factories itself. And those plants, we expect that in H1, by the end of H1, we should be able to be up and running, and that should start contributing in the second half or going forward from then on. So, any new capex? No, we don't see any significant capex to service whatever we have planned today.
Mr. Thakkar, we just have another 30 seconds, but our colleague who tracks your company and sector more closely is just asking us to check this. Apparently, you had a LOI pipeline of close to 8,900 crores, out of which 820 got converted to contracts. But it seems that rate of conversion from LOI to actual contracts, that's really diminished. So what explains this, and where are you right now in terms of LOI and then actual contracts?
Okay, so let me give you in a very different manner. If you look at it, the 2 years back, we had signed around 2,600 crores of LOIs and contracts, which should translate to around 450-500 crores of revenue from there. Okay, and typically these LOIs and contracts will take 12 to 24 months to really get into commercialization, and then it takes you a couple of years to ramp up fully. Right, so it's a 2+2 kind of a time period that you should be looking at. So the numbers that we had signed in 22, if you look at that, we have done around roughly in the range of around 200 or a little less than 200 is the kind of revenue that we have generated from there. So if you look at it, we are on the ramp-up period. Yes, that ramp-up has been a little slower than what we would have expected because of the environment that we are in. But other than that, we see that the LOIs are. So see, another thing is that if you talk about LOI or a contract, they both mean the same to us, because these are the customers who are top-notch customers who would not ink on the paper till they have crossed the T's and dotted the I's. So to that extent, I don't see too much of a variability coming from that side. Yes, the ramp-up has been a little bit pushed out for the reasons that we have talked about in the earlier part of our conversation.
Thank you very much, sir, for joining in. That's Anupam Rasayan. After a near 8% decline in top line in FY24, the company is now looking for growth in FY25, though it will be a bit back-ended. PSUs are doing very, very well. Look at RVNL, 13% up, SJVN, 9% up, IRCON, 8.5% up, HUDCO, 7.5%. We already spoke about BEL, but the entire PSU basket, as you can see, has been flying and picking up pace in the last few minutes. Get into a break. On the other side, Soumyajit Niyogi from India Ratings and Research will join in to discuss the rise in related party transactions, and is this a worrying sign for India Inc.?